This.
Morning, everyone. This is Sean Myers with GreatLeaf Capital. I want to welcome you to our webinar today. Give you an overview of what we're doing as a company and the Florida housing market in general. We're waiting for a couple more people to log on. I see we have participants getting on right now. So just give us a few minutes to get started, and then we will get underway. We'll have a couple of members from our team on the webinar today. You can see Raul Vitia's camera, I hope, in there. He's one of our founders in GreatLeaf Capital.
Thank you, Sean. Thank you, everyone, for joining us today. We're very excited to be sharing information about our company, a little bit of our background, and what's gotten us to this point and with this project.
Yeah, we'll do a relatively short presentation, and then we'll have a question and answer session. I believe you're also able to post questions into chat if you have a question as you're going through, and we'll try to get someone to get to it, or we'll look at that question box once we get done with the presentation. I'm just going to wait a few more minutes and then get started. Morning again. This is Sean Myers with GreatLeaf Capital. I want to thank everyone for logging on today. I'm looking at our attendees as they're logging into the webinar today, and we'll get started in just a minute or so. Thank you for joining us today.
Then there's a few people still trickling in, so we can probably get started within the next minute, Sean.
Yeah, I think in another minute, because I'm looking at the people we have who've logged in versus our registrations. We're pretty close to the total number, so I think we're going to be starting in just about 60 seconds. Thank you for your patience, and you other guys get in that webinar on time. All right, let's get started, everyone. My name is Sean Myers, and I'm with GreatLeaf Capital. I'm one of the co-founders. Raul Vitia, who's another co-founder of the company, is joining us today. So you may see his screen.
Hey, everyone.
I'll just do a real quick introduction before we get into our presentation. I started in real estate in 1995, worked as a land broker, primarily on the western part of Metro Orlando, assembling a pipeline of 7,000 acres future development land for investors. After doing that, went to business school at Duke University, got an MBA with a concentration in finance, worked as a summer associate in Wall Street, learned a ton of information up there, then came back to Florida and we started developing those original acres, plus adding more in Northlake County, where we ultimately put together a portfolio, a pipeline of entitled and developed lots that we sold to publicly traded home builders, with a total value of about $300 million. After the great financial crisis, which was fun to work through, got into distressed apartment investing and learned the property management side of the business. That's where Raul and I connected. He has a property management company that we are partners in, and so we've grown that to manage over 600 units for probably about 400 different investors, and handle everything on that aspect for them. At the same time, we continue to do development. What we're mainly going to be focused on today is the home building effort that we started 4 years ago, and going over that. And we feel we got to a point where we've got that company to a really good operating systems in place, teams. We understand what we're building and where, and so we wanted to share information on that. And I can, kind of just, like I said, I'm going to try to make this like a brief 15 to 20 minute presentation, provide some opportunity for questions and to get in touch with us after the webinar. But I can tell you mainly what we've set up is based on our experience working with investors. We try to tailor the opportunity to work with GreatLeaf Capital on the home building side to something where it's, for investors who are needing like a 10% return cash yield, or greater, in our company. If you're dissatisfied with the stock market volatility, or you don't like the high valuations that stocks have grown to, perhaps you're frustrated with low bond yields, or you just want to diversify your portfolio into real estate, our company provides an option to invest in real estate. We've set it up as an operating company, so it's generating current income, and that's how we're able to make those current income payments from our home sales. And unlike directly investing in real estate, you don't have to do any of the kind of work of finding the property, dealing with the property, or managing it. We do all that for you. So that's kind of the overview of that, but let's get into the presentation. So as you can see on our screen, that was one of our houses that we built, one of current models. But our company, we're growing it into a regional home building company. As I said, it was founded by myself and Raul. Each have, over, don't want to say how much I have, but like decades of experience in real estate. So we know our markets. We know a lot of the different types of real estate. GreatLeaf Capital, we're focused on those two things: new home construction and land development. And the markets we operate is Central Florida and the Orlando Metro, East Florida and Brevard County. And then we recently, about a year ago, started operations in Southwest Florida in Sarasota and Charlotte counties. So we're looking at those places where we see demand and growth. So if we take a overview of like the national problem, this has been in the news a lot lately, the housing supply. We have a shortage, and that's why you saw such a big increase in home prices and a big increase in rent over the last 3 or 4 years. We stopped building houses after the great financial crisis. Developers like myself stopped permitting new homes. We went to focus on income producing properties, existing ones. And so that created a multi-year supply deficit. We're just not building enough homes. The home construction stopped, but none of the population went anywhere. And is actually that population is getting to an age in demographic shifts where there's going to be more demand for homes, either rental homes or for owner-occupied homes. The problem with that is that we have restrictive zoning codes and regulations that seek to limit new supply. So that's happening in Florida. It's happening, all over the country, frankly. And so if you look at the big picture, long-term, 10 years, 15 years, we're operating in a supply-constrained market. Let's go to the next slide. Now, if we look at the demand side, we're in Central Florida. We build in Florida. You can see these population changes, and it's filling up in the Sun Belt. That's been in the news too for quite some time. Florida was the highest ranked for net population gain recently. I think that's a long-term trend that's continuing to happen. People moving from, we've sold several homes to people from New York, Illinois, California. They're leaving those states and coming here, Texas, Arizona. I think that's a long-term trend that's going to also continue. So we've got this, supply side where we can't get enough homes built, and we have this demand side. We have more and more people coming to our neighborhood. So we do our best to supply them, but that's why you're seeing this kind of growth in demand, increase in prices, and increase in rents. That's the market, showing that there's more people coming in. So that's the structural case. Of course, cyclically, we're going to have changes in, interest rates and things like that affect kind of like the near-term supply and demand of housing. But long-term, we think we have an excellent position. Why Florida? It's not just because we live here, but there are several advantages to operating real estate in Florida. If you live here, you understand the climate is very nice, temperate, maybe sometimes tropical climate, depending on where you are. But we also enjoy faster construction because we don't have the same kind of winter weather they have in other places. And there's a lot of diverse choices as far as ecosystems or type of environment you want to live in. We touched on the population growth before, but here's some statistics on it. We're gaining 1,000 residents per day, those people coming down here, and you'll see some other stuff in the news about how much income Florida has gained. And it's, I think, about 22 billion in reported income, and that's from the IRS data. So these people moving here, they're bringing their assets and their income to the state. We think that's a virtuous cycle that'll continue to drive business and growth in Florida. So as I touched on before, number one in the nation for annual growth, and we're looking forward 3.4 million net migration over the next 5 to 6 years. That's a lot of people to come in to the home. If you're familiar with the state, in Metro Orlando, we're one of the tourism leaders, probably over 50 million visitors per year. Very popular for decades as a retirement destination. I think that as actually trend is going to increase also. Kind of newer thing on the radar is tech job growth, and that is in Tampa, in Miami. You see a lot of tech and finance coming in. Where we operate in Brevard County, Melbourne, Space Coast, there's a lot of things with SpaceX, other companies out there, and technology supports that. And so that's all combined to help us be like number 3 in job growth and employment growth. When you're a housing supplier like we are, that's what we're looking for. Job growth, population growth, employment growth all leads to more housing demand. So let's get into basically the nuts and bolts of what we do. And, fortunately, I think this type of real estate, a lot of people are familiar with building a house because they grew up in one or they see one or they know it. But we're basically taking a vacant vacant lot. And then we have our design, get it permitted, have our contractors and vendors, assemble all the materials to produce the house to our specifications. So we manage that process as far as selecting the materials and design. And what we go for is we're competing with publicly traded production home builders, the same company that I used to, companies like Lennar and D.R. Horton, KB Homes. And so what we're doing with ours is we try to do an elevated model. So we do higher ceilings, which is, taller doors, bigger windows. It looks a little more elegant when you get inside the house. The home seems larger. We do solid surface countertops, stainless steel appliances, tile in the bathrooms and not plastic inserts. So when a buyer is looking at our 3-bedroom, 2-bath home or 4-bedroom, 3-bath home and D.R. Horton or Lennar, they just can tell right away ours is nicer and pretty close in price. So that's the way we compete with those builders on that. And we've been very successful at that. So if we look at our past results, this is our average home sales price. We're trying to hit right in the middle of the market for our markets because we want to be where the maximum amount of buyers are. And it's $360,000. That, believe it or not, is pretty close to the median home sales price. So when I started in this business, it was $125,000 for a new home. That was a long time ago. We've come quite a way since then. Our average construction cost, and this is over a little over 60 homes, averaged right under $250,000. Our lot cost $26,000. So over those closed sales, we've generated about $70,000 per home in gross profit. If you look at how that totals in across all those sales, 22 million in sales, 15,000 in construction cost, just under $1.6 million in land cost for $4,327 gross profit. All this is pretty in line with the publicly traded home builders as far as their cost and profit margins. They typically going to be a little lower than us on cost because they have some economies of scale, but we think we have been beating them on the lot cost, and so it kind of comes out even, and that's what we benchmark ourselves to, what they report in their quarterly reports as far as their margin and cost. So if we look forward, our current pipeline, next 12 months, we have about 41, 42 homes in the pipeline right now in various stages of construction. We're projecting those sales to come in at 376. So you can see a slight increase in sales. There's an increase in our average construction cost about $290. So that's about $50,000 over, our previous 3-year operations. And part of that is we have very real cost increases in supplies, material, and labor. And at the same time, we've also done some additional features to some of our homes to make them nicer, as far as putting in like high impact resistant windows for storms and hurricanes and things like that, which I think add value to the house. Sprinkler systems, stone accents, more improved flooring. So things like that we've gained from that experience. So it's put our cost up a lot. At the same time, our average land cost has gone down. So we think we're going to end up the next 12 months pretty close to the same, average gross profit around 65,000. What that looks like on a total basis: 16.3 million in total sales, 11.805 million in total construction cost, 788 in land cost. Again, 2.824 million in total gross profit. And so one of the interesting things about this investment, as opposed to other ones we do with like multifamily, is the homes we're going to be selling, this month are homes that we started 12 months ago. So I thought that was really quite different than a lot of the other real estate investments I've been involved in, where you're putting, you're putting money investment into the project, you're acquiring the project and renovating it. This one we're already operating, so we're already running. So that'll be a great opportunity to open this up to investors because they can come in and participate in the cash flow from the work that we started over 12 months ago. It does take us about 12 to 14 months too, from start to finish. Okay, so our second main line of business is land development. This is going to be a little less familiar to the average person because they don't see this happening as often and not as familiar with it. But it's a similar idea where we'll, instead of a vacant lot, we'll get vacant land. This is a 38-acre property in Leesburg, Florida. Probably was an orange grove 30 years ago, before the freezes. And then a lot of that stuff got converted to cow pasture. So it's operated as a cow pasture right now. Taxes, we will take this from vacant land into a new community. So we will work through with the city and permitting jurisdictions, school board, things like that. This particular project, we got approvals for 253 townhomes on there. So similar idea, we're taking a piece of land or we're doing improvements to it that increase the value of the project. If we look at current projects, we're projecting $35,000 average lot sale. 24,807 was our average cost for land. About a little over $2,000 in average permit expenses to get from the raw land to the permitted community. So average gross profit across those projects of about a little over $6,000. If we look at the totals, again, that would equate to 18 million in total land sales, just shy of 13 million total land cost, and about $1.1 million in permitted expenses. So projected gross profit of 3,305,000, and that'd be for 518 lots in our land development current projects right now. Those will be completed and delivered most likely in summer to fall of 2025. So if we're just doing a kind of overview of what I talked about, and this has a lot of numbers on it, but this is our team track record over the last, I guess it'd be 4 years. So total homes sold 61 as we've been ramping up. The new construction pipeline, which just went over 41 homes, and we're adding more to that as we go forward. And then the land development pipeline, past and current, 1,127 lots. So let's go to the next slide. A little bit about our team. There's our great team photo. So you can get to know us as we move on from this. But one of the things we touched on before, as far as this current effort, 22 million in new home sales. We're really proud of the way our team works together. That's one of my favorite parts of this job, is working with the people you see in this photo every day and our other vendors and suppliers. I really love what I do, so it's a pleasure to do it every day. Our partner, Devin James, is really strong on the operations and making sure everything follows a process. So we've built in operating systems for every aspect of the business. Veronica, who's pictured in the middle, she is our manager of home buyer experience. She's been doing a fantastic job. We're not just building homes, we're trying to deliver them and make our buyers and owners feel really glad and happy. And so she's been getting 5-star Google ratings from our home buyers, which we think is fantastic. It's very hard, as you know, to get good ratings, very easy to get bad ratings. And so the fact that she's managed to get us, I think, over 20 ratings from clients right now, we're really happy with that. And we think long-term, that's going to help our competition. So we're building a nicer house than the home builders, and we have, the big home builders, and we also have much better delivery and customer service, resolving issues, making them feel happy and welcome when they move into their new house. It's a very emotional thing for homeowners, you can imagine. We look at each project and home. We run an analysis on it to make sure it's going to meet our projections as far as cost, sales price, time, and return. And as I've touched on before, we look at high demand areas where we see population growth, job growth, employment growth, and we see a lot of those buyers who are for, in the price range of our middle market homes in that like $360,000 to $415,000 price range. And as far as investors, we have set these up to where investors would have a priority of distributions of cash flow from the sales and operation of the company. And we've tried to structure those so it produce attractive returns relative to what you would find in the stock market or doing a direct real estate investment yourself with all the work that entails. Let's get to the, so if we do an overview of the 2 membership classes that we've set up, where you would become a preferred member in the company, you would own shares or LLCs. It's a limited liability company, so they're called membership units, but it's equivalent to shares in a company. So we have Class A foundation. This is tailored more to our experience with a lot of investors who are at a point where they're not trying to take a lot of risk or generate huge increases in wealth. They want to generate income. So we set this up to where it earns a preferred return of 10%. The projected annual return would be 10% per year. That would be $60,000 over a 3-year term if you invested $200,000. We can do fractional units on these, so it does not have to be a $200,000 minimum. If that's something you're interested in, we can talk about that. In this case, the monthly income would be $1,167 per month on a $200,000 investment. The distribution order is first priority, so that's in the LLC operating agreement and the private placement memorandum. If you're interested and want to learn more, we can get into the details. But basically, when we sell a home, we create cash flow, and we have to pay all the expenses of the company, obviously. But then our next priority is sending out that 10% payment to the Class A members. Then for people who are more interested, they still want cash flow, but they're not as focused on that, and they want additional upside. We have a Class B membership interest, which we call like the growth class. Investment here, we would recommend 100,000, preferred return of 8%. And that would be a projected annual return of 15% because we would make the 8% payments quarterly. And then once a year, we would do a distribution of cash from the company, 70% of the cash flow from the company until you hit a 15% return. So that would be 45,000 over the 3-year term of this investment. This is quarterly instead of monthly, so that 8% would equate to $2,000 per quarter. This distribution order is second. So we pay the A first, and then we make the distribution to the B. And once the B has gotten all that, then we do the distributions to the Class C shares, which is the ownership of the company, the equity investors. This is just an overview of these two. It's something that if you're interested in, we'd have to get into more details, obviously, and give you the full documentation in the private placement memorandum and our company's operating agreement, which outlines all the rights and responsibilities of each kind of share class.
Sean, and if we can go back to the last slide for a second.
Sure.
I think as Sean mentioned earlier in the presentation, we've been working with investors for, gosh, a better part of the past 20 years in different types of investments, including multifamily investments, land development investments, and such. And for me personally, I mean, my focus has been for the past 20 years working in project management, property management. And after working with landlords and investors in income-producing properties, the feedback that I've received, obviously, is a great investment. Folks enjoy it. There's a lot of upside in those type of investments as well. But more and more, it's become evident that some investors, depending on where they are in their lives, are starting to look for a more consistent type of cash flow to where, for example, the management of income-producing properties, a rental, comes with its own set of challenges and moving pieces, whether it is work orders, vacancies, and other aspects that may affect the income of the property. This is kind of more of a turnkey type of investment where we'll handle everything for you, and it's a lot more passive than otherwise the owning and management of rental properties could be. So after hearing the feedback and getting the operations going for our home building company, we found that this was a perfect avenue to be able to provide that type of investment and that type of passive involvement in real estate while still being able to diversify their portfolio into real estate. That will be kind of my 2 cents that I will throw in on that.
Yeah, we definitely, in designing these, we've taken a lot of feedback we've got from investors over the year. And I think one of the keys is making it easy where you don't have to do a lot of work. And the second one is having current cash flow. Because I've done a lot of my typical projects in the past would be a 36 to 48-month project. You're making a large investment in a single project. If it's a Class A office building apartment in San Antonio, Texas, or Lake Mary, Florida, and you're targeting 18 to 20% returns and generating those, but there's no cash flow in the middle. So as I was working with investors, like, I like this, I like these returns, but do you have anything that just, at the time in 2011, 2012, like, I'd just like to get 7%, on some of my money. And, so I understood that desire and need. It just doesn't fit the cash flow. If you're building a new $70 million apartment building, it's going to take 36 months to, longer before you actually have cash generated from that project. So if we look again.
And the other thing, and the last thing that I'll say that is really important, and piggybacking on the multifamily. Sorry, Sean wants to go to the next slide, but piggybacking on the multifamily, if you do a value add multifamily investment, obviously you got to go through the progression of getting the property, adding the value to the property before you start receiving the distributions. As Sean mentioned earlier in the presentation, the distributions that we're able to provide now for the investors that come in and start receiving distributions the following month after their investment is due to the fact that a lot of these homes have already started. It started 12 to 18 months ago. So we're able to utilize the working capital that we're already generating in order to start paying out those returns. So I think that's one of the cool things that the investors that have joined us so far find appealing. It is a shorter life cycle for the investment, and it basically meets their goals of having a more passive involvement in this type of investment.
Yeah, absolutely. So we look at some of the benefits that we believe we convey through this structure. If you, like I mentioned at the first part of the call, if you're looking for some diversification, the benefits of real estate is that you can it's an alternative to the stock market, which could be, some people might consider a little overvalued or get in that territory. It also has volatility effects and not quite the same correlation with real estate in there. So you get some of that benefits. We get a higher yield than bonds. I mentioned before the priority of payments. So the A and B getting the distributions of cash flow from the company before the C members. So we're working hard to, satisfy those preferred returns. And then we get a distribution. I think the key differentiators of this is the cash distributions that we can make monthly in the case of the A shares or quarterly in the case of the B preferred return. As Raul just said, it is a passive investment, which I think a lot of people are interested in real estate. But if you're trying to do it on your own or directly, it's frankly pretty difficult to find an investment and then to get involved in to manage it. In this case, we do all of that work for our investors. And then as I touched on before, we have the investors, first priority for Class A and B on distribution. So you're receiving that before we're receiving, our share of the profits. So if we look at why now, it's kind of going back to the end of the presentation, we are in that persistent undersupply of housing shortage. At the same time, that's overlaid with trending population increases in Florida and demographic change of people in younger generations getting to the prime home buying age. And that was actually, frankly, delayed. So they're a little behind and they're starting to come up and going to catch up with a vengeance. And then, so we see persistent demand. We think we have a lot of runway, like years and years to continue to supply homes into this short market. And then again, as this investment touched on several times, generates current income. We have a future pipeline already set up and we're continuing to add to that. So you can, we're not a startup. We have 4 years of experience in this particular field and then decades of experience in real estate, land development in general. So we've already demonstrated our profitable results, got a great team. Everyone understands their roles and what they're doing and systems that we refined and put in place. So it's not something new, it's something we took a little time to work on our own before bringing it to our investor base. So I want to thank you again for getting on with us today. And I'm going to go over the next steps. If this is something you think might be appropriate or interesting for you, then we can set up a time to speak with one of us. I don't know if we actually have the QR code on here, but we can send a follow-up email to you. And so, do a call or meeting. I think you can tell from the presentation, we like to talk about real estate, so we might have more answers than you have questions. If you are interested, you can create an account in our investor portal. It's secure. You don't have to fund it, but you can get updates on that and examine the investment documents. If you determine that you like Class A or Class B or both, then we can walk you through how to fund your account and set that investment up and then start generating income. So I think now we'll move on to the question and answer session if we have any of those. And I think because this is a webinar other than a Zoom meeting, you maybe can't ask, but you could type in questions. Let me see, I do see a couple. in there. Okay, so someone asked how to get into the investor portal. So that's a separate, you could do that from the website. If you click on the investment portal link in there, and if you would create an account, basically name, email, things like that to get an account. We would get a notification when you did that. And then I see, so we can walk you through that and send in a follow-up email link
I'll
to
go ahead
that.
and we can.
Yeah. And then I have
It's
another
important
question.
that our website is greatleafcapital.com, and I believe on the top right corner of the website is where you'll be able to find the investor portal link, and you'll be able to register. And it's actually pretty neat. You'll be able to see your investment, make commitments, and so forth.
Yeah. Okay, there's another question about the risk. So this is like any other investment, and we can't guarantee or promise that we're going to perform as we did in the past or that we'll hit our projections. So there's definitely risk to this, just like any other investment. Try to modify that risk by doing our underwriting and picking markets that we believe have long-term trends in our favor. But yeah, you can see we had interest rates increase, the Fed raising rates in 2022 at the fastest rate in 40 years. That really took a lot of buyers out. There was a pause. We saw increase time it takes to sell a home. That will lower our total return on equity. And, we went through the results you saw were us working through those delays, things like that. I will say home prices have flattened out, but we understand that too. We haven't seen home price decreases, but we do project that they're going to kind of be flat and then maybe start to increase. So it's not a riskless investment. I would never say any investment doesn't have risk. So our risk would be, sales slowing down. We have like longer holding costs. It could be price declines or volume declines, and those are there's economic things that are out of control, but that's the environment we have to operate in, and we do our best to mitigate those risks by carefully selecting which markets we're going to build, making sure our product fits with the market, and constantly evaluating. We have a weekly update on how many homes are listed for sale in our markets, what they're selling for, days on the market, things like that. And so I hope I answered your question. I didn't type it in. And the other one is, could we invest less than 100,000? Yeah. So all our investments, we have like a unit size, but we can take fractional investments. So for instance, if someone wanted to do 50,000 or 25,000, we can accommodate something like that. Just speak with us afterwards. We just do have to make sure you're an accredited investor. That's part of the reason we have the higher minimums, just to make sure or lead us down the path of dealing with accredited investors. There's a follow-up question about the risk, about how the risk would affect Class A shares. So when we look at our cash flow projections, and that'll be in the private placement memorandum, and we can cover those if we get in a call, the cash flow from our companies is far, far above the 10% Class A distributions. So we can get into that, but it would be an extreme scenario. I'm not saying it's not impossible, but extreme to where we were not making the 10% distributions to Class A. But once we get into the details of the financials of the company and things like that in the PPM, you can get a better picture into our 12-month cash flow projections and how that relates to covering the 10%. So we think that if we perform as we are, we're going to be covering the 10%, 15% to the Bs, and generating cash on top of that. I have another question. How is the monthly return delivered to investors? Is it electronically transferred? Does it get placed into the portal account for us to transfer? So it doesn't get placed. Your portal is not like a bank account where you're moving money in or out. It's basically a record of the money you've moved in and out, and a way to monitor it. But the returns we can send by check. We can set up an ACH transfer. We don't do wires because it would, be kind of inefficient to do each of those individually. So it's either when you create an account, you can specify if you want to receive a paper check through auto pay, or if you want an ACH transaction where it just shows up in whatever bank account you designate. It has to be your account, but the bank account that you designate to receive the monthly payments. I'm like all these questions. Any more good ones? We'll look forward to answer those too. And like I said, if you want to if you want to learn more, we'd be happy to set up a one-on-one phone call with you or meeting and kind of get even more into the details. One of the things of when the questions about the risk, when you log into the investor portal, that's where you can access the private placement memorandum, which goes into in-depth discussion of the various risks that could affect this investment, and also tells about the the rights and the responsibilities and the priority of payments you have as an investor, and provides more financial detail on the company.
We have another question, Sean. If we're interested in learning more, how do we set up an appointment? There are links through our website as well to schedule an appointment. I believe after the webinar, if you register for the webinar, you'll also receive a follow-up email providing you with the information on how to set up a call and stay in touch with us. And those will probably be the easiest.
Yeah, so if you
We
go
don't
to
have
the
a
website,
scrolling phone number at the bottom of the screen at the moment, but perhaps we'll do it for the next one.
we don't have any operators standing by right now, but if you go to the website, there's a link on there to book a consultation call, which you can do. We'll send a follow-up email to this that'll have a link to set up that call. And again, if you go to the investor portal and create an account, that'll trigger us to contact you and reach out and find out what you're interested in and what questions you have. So hopefully multiple ways that you can get in touch with us, set up appointments. If you're in the Florida area, Orlando area, we'd be happy to meet in person. We can also do one-on-one Zoom calls or things like that to answer questions, or phone calls, whatever your preference is. All right. We don't know how long we have been going now. I don't know if I hit my 20
We
minutes.
have one more.
Oh, one more question.
So I also saw that on the website that you'll be hosting a seminar in a week or so in the villages. Will that event dive deeper into passive real estate investing, and GreatLeaf Capital? Yes, so we are going to be holding a series of in-person seminars. So far, the next couple are going to be in the villages, Florida. And our whole operating team will be present. So you'll be able to meet not only Sean and I, but members of our team, Devin, Veronica, Andrea, Adam. Ask questions. We think that that's important. You'll get to see who are the people behind the black screens in the webinar, and ask questions. I mean, we understand to us, folks who invest with us, not only through GreatLeaf Capital, but at any point in the past, we find that to be the greatest compliment, and we take that responsibility very serious. And we understand, I will want to know who you are, what the plan is, and what the goals are for the investment. So we'll be available to do that. After those, I believe we have a couple more seminars. We don't have the dates yet, but they're going to be held in Orlando, Winter Park area, where our main office is. So you're welcome to join those as well, and
One
you'll
of those in
learn a little more.
December in Winter Park, and probably the second week in December. I think we're scheduling one in the Winter Park, Orlando area that we can also would post that on our website, and we can send out an email invitation to all the people who signed up for this webinar, because in person is great. And yeah, you can get into more detail, and we typically do those events much longer than the online webinar. So do we have any other questions? I don't know if we do, but I want to thank everyone again for your time and attention to this. I know there's a lot different options you have to do things going on, but we're glad you could join us today. I hope something was interesting and informative to you, and we look forward to talking with you in the future. There's multiple ways to get in touch with us, and we look forward to connecting and answering your questions. Thanks, everyone. Thank you, Raul.
Thank you, everyone.